You are listening to the Aging Starts Now podcast, where it's all about responding with confidence to the legal, financial, and personal challenges created by a disability, unexpected illness, or aging in general. Join us weekly as elder law attorneys Barbara McGinnis and Chris Johnson, along with other members of the Johnson McGinnis Elder Care Law and Estate Planning team, talk about the tools, techniques, strategies, and services that will make the elder care journey easier for everyone involved. Get ready, because aging starts now.
Have you ever heard the term life settlement when you're talking about life insurance? I'm Elder Care Coordinator Katlyn Green, and today we're exploring other supplemental money sources that seniors have available. Our friend Rob Haynie is here. He's the owner and managing director of Life Insurance Settlements, one of the leading life settlement brokers in the industry. Hey, welcome, Rob. Thanks so much for joining me.
Well, thank you for having me, Katlyn. It's nice to be here.
Can you give me a good definition of when we hear the term life settlement? What is that? What should I be thinking?
Well, I'll give you the one that I use all the time. So a life settlement is the sale of an existing life insurance policy that's currently in force that the owner typically no longer wants, some cases no longer needs, and unfortunately in some cases can no longer afford. And what my company does, Life Insurance Settlements, Inc., is we represent those individuals, and we go out to the marketplace to all the different providers or buyers, if you will, and place their policy in front of them and put all of them in the uncomfortable position of being in a bidding war where they are asked to give the best offer based upon two criteria. Number one, the insured's estimated life expectancy, and two, the cost of the life insurance premiums on the life insurance policy, both now and going forward, to that projected life expectancy. And then we conduct that auction, if you will, until its conclusion, and then give the client the ultimate choice as to what he or she wants to do with their life insurance policy at that time.
Oh, okay. So that answers some of my questions, because I was wondering, when would this be advantageous? Like, I hear some people, they consider alternatives like reverse mortgage or converting some assets into annuities to create pensions or income. What would be the best case scenario to do this? Like, if I had life insurance, you said either don't need it, really can't afford it. Is that the optimal time to look into it?
Yeah. So everyone buys life insurance. If you think about the typical life insurance sales process, you're typically going after someone who's a lot younger than someone that would typically sell their life insurance policy in the life settlement market. So someone is in their 30s or 40s. They buy life insurance for a whole host of reasons. Protection in case one of the spouses were to pass away prematurely, to protect the mortgage, to help insulate them from catastrophe in the financial sector as it applies to raising funds for their children's college education, et cetera. So once you bypass all of that, and most do, let's be honest, they get to a point in their life where their house is paid off, their kids have graduated from college, they want to downsize from their home. And they're looking at this life insurance policy and they're saying, wait a minute, I remember paying, make it up, $20,000 a year. And now I'm paying $100,000 a year for the same coverage. I don't need it anymore. So what most people in America do is they either surrender the life insurance policy for any cash surrender value, should there be any, or in the case of a term, they just lapse the policy. And to put that in perspective, that happens 90% of the time.
Oh, okay.
90% of the time, people will lapse a life insurance policy that he or she owns because they think that's their only option. Mm-hmm. Their life settlements. So someone gets to that arena and says, well, before I lapse it for zero, so a pretty easy number to beat in the life settlement market, or before I surrender it for $38,000, I'm going to go out to the market and see if someone will give me an offer. So I'm on the board of directors of LISA, which is Life Insurance Settlement Association. And we back into the numbers every year through a data collection study that we do. And we find out, on average, that people get 6.5 times more money selling their life insurance policy than they get if they surrendered their life insurance policy. So, putting that in perspective, if they were going to surrender it for make it up $50,000, they're going to sell it for $450,000. So let me ask you a question. pretend it's you. Would you rather get 50 or 450?
Oh, exactly.
Exactly.
Yeah.
So that's why it's easy. So life insurance companies do not help us because they don't tell anybody you can do this.
Right.
They just think what are your options? We can surrender, you can lapse it. And the reality is there's a whole nother world out there for folks to take advantage of. So our business has been around for 35 years plus, and very few people, if any, know you can do this.
Yeah, I'd like to think that I'm fairly insurance savvy. And this has been something that has just kind of confused me. So talk to me a little bit, if you don't mind. I'd like to pick your brain about some of these policies I've been seeing a lot, like it's term and then it converts to universal.
Correct.
And
our whole life, they convert. So when a term policy ends its term, we'll just call it usually around age 70. We'll use that as an example.
mm-hmm.
You can convert the policy to a permanent product, as you mentioned, and the premiums become much more expensive.
Right.
Okay. And that usually tells people like, I don't want to do this. So they let it go. In our marketplace, that is actually one of the better policies to market because you're taking a term, you're moving it to a permanent product that the buyer now understands the premium costs. They will be paying the premium at the pure cost of insurance number, not what the carrier wants you to pay. And they get to do that because when you surrender when you convert the policy, you're generating a new life insurance policy. There's another commission that's generated there too. So that helps offset the cost of insurance and helps you really, really manufacture an offer for the buyer. But he or she doesn't want to pay that premium because it's too expensive. It's just like when you look at like life insurance on TV, they'll say, buy life insurance, guaranteed issue. There's smaller dollar amounts and there's no medical questions asked. Mm-hmm. So you see like $9.95, the guy that always says $9.95. There's smaller policies. Those are really burial insurance, right. Final expense insurance. In this case, we're talking about an opportunity to take life insurance and kind of manipulate it or use it for your best interest, whether it's cash or breaking the policy into smaller pieces, selling some, keeping some, getting a retained death benefit offer, which allows you to get life insurance but not really have to pay the premiums for it. So there's a whole host of ways to utilize life insurance. Some people need life insurance but just simply can't afford it, and this is a way to help them do that.
Oh, yeah, I see that a lot. And I want to loop back to something you said that I was very impressed with, is that it depends on your stage of life. As an elder care coordinator, this kind of everything that the older adult might go through is really my purview. And I see that people that need a lot of life insurance, like you said, may have mortgage or overhead or kids in college, or it's not about enough coverage to bury me or to do my final expenses. It's about maintaining life of those that are dependent on them. Maybe it's a special needs child. Maybe it's a mortgage. And so do you recommend for people that don't have that overhead, what type of, you said a smaller amount, would you recommend?
You can buy life insurance in smaller amounts with no medical questions to take care of, like, for example, the burial insurance. But what's happening now, and I want to congratulate the elder law community. We actually attend some elder law conferences across the country, and I think, and I'm not saying this because I'm one of your shamans, to be honest with you, they're the best people I've ever met in my life. They're the most thorough. They care about their clients. And what I've learned in talking with a few folks that do business with us is most of the people that are utilizing their life insurance policies in the sale of the life insurance policy to help them to age in place, meaning they're going to take their home that they've paid for and don't have a mortgage on and kind of create a scenario where they can maybe put in some larger hallways, expand the bathroom, move a bedroom from upstairs to downstairs. Mm-hmm. So they're keeping the equity in the home, yet mom or dad or both are still living in the home, as opposed to selling that home, taking all of that and then giving it to an assisted living facility or some other adult community where they can transition as they go through life, which in some cases they just can't afford. So this allows them the opportunity to do that. So you can do, when I talked a little bit about breaking the policy into smaller pieces, and I mentioned retained death benefit, they can say to you, like, for example, Katlyn, we're going to take your policy and we're going to give you let's make it up. It's a $500,000 policy. We're going to give you $15,000 in cash, but we're going to give you $100,000 or 20% of the death benefit is going to be maintained in what's called a retained death benefit. What does that mean? That means that you're going to be at the carrier recorded to own 1/5 of the life insurance policy. So when you pass away, your named beneficiary, your estate, gets the $100,000. I think that clears up any of the things you've discussed in your question, which is how do we bury mom or dad or both and all these different things. Well, that money's set aside to do that. But the key is when you sold the policy to the third party, that you haven't paid a single premium from that date and time until you pass away. So that allows you to have life insurance. I don't want to call it for free because nothing's ever for free, but you're not making any premium payments on it.
Right.
And that has become very popular with people that do want some life insurance, but don't want to. Some cases, I mean, I have a client, some of these don't trust themselves with their own selves with their cash. They don't want the cash. They're afraid they're going to go on a trip and then not have any money to bury, leave that burden to the children. So this allows them to do that.
Yeah, well, I have to tell you, Rob. I don't know if you know this, but as one of the ECCs here, one of my specialties is funeral service, end of life and funeral service. And so, I always when people ask me about insurance, my first question is, "What do you want it to cover?"
Right.
And if they say, "I just want to know that my traditional funeral and burial is prepaid," I encourage people not to take out more insurance, but to go to a pre-need with funeral home. But if they say I'm worried about my wife and kids and my mortgage, that's when they really need to look at, different options. So I appreciate you clarifying that. I'm wondering, one of the things I don't know or done a note about is, let's say I have this policy and you sell it for me to get this marketplace highest offer. What's the tax implications on that for me?
So great question. So let's just forget life settlements even exist for a moment. If you surrender your life insurance policy and you have paid, we're going to make this up, a $500,000 policy, and you've paid $125,000 in premiums over the course of owning this life insurance policy, and you're surrendering it for $200,000. Okay, you're going to pay ordinary income on $75,000. Because you're not going to get return of premiums. There's no cost base. There's no tax implication return of premiums. But the $75,000 extra, you're going to pay ordinary income on. Okay, that's just a fact. Now, when you settle your policy, let's make it up and say you sold your policy for $250,000. So in that case, you'd pay $75,000 in ordinary income, and you'd pay long-term capital gains on the $50,000 over and above the $200,000. Which was, basically because you've owned the policy for more than 2 years. You can't sell a policy until it's at a contestability and suicide. So there are exemptions. If you got a terminal or chronic illness or a financial catastrophe, we can wiggle yourselves way out of that. But those are really hard to qualify for. But so just you realize most policies we sell, 99.9% are 2 years old or older. So there's your answer. So you do pay taxes. Now I will tell you that I know a lot of accountants and know more and more every day that I work with that will tell you there's 100,000 ways to Sunday to legally not pay taxes on things where you ordinarily think you would pay taxes. There's different things to write off, et cetera, how to take that money, recapture it, put it into play, put it inside a trust. That. So, but I always tell people you want to consult with your CPA, your financial planner, and discuss the taxable ramifications of a life settlement.
That makes sense. Because it's like you said, some of it's the cost of doing business, but I wasn't sure.
Well, I'll add one thing I should say, which is important. If you qualify for what's called a viatical settlement, so in other words, you have a life expectancy that's somewhere around 24 to 36 months, depending upon the state, it's tax-free. All the money you get in the settlement, you're not paying any money on.
Okay, I have heard of viatical, and I've seen more and more riders that include either long-term care or doing long-term care insurance a little bit differently and putting it in with life. But I've also seen some not sure if you would call them exemptions, but like terminal life clauses. Like I resonated when you said, it resonated with me about retaining the death benefit. If you are, some of these policies, if you are diagnosed with a terminal illness, you can use some of that and still retain a death benefit, which I think has been helpful for some people.
That's called an accelerated death benefit. And I want to congratulate myself and the industry, because the reason that exists is because when I started in 1993, most of the policies were sold were radical settlements, and that we fought, lobbied with other groups, certainly people with HIV and AIDS, for that designation.
Yeah.
That you can now get that money tax free because you're using it. I've had clients to use the money for medical procedures and medical, if you will, medications that weren't approved through their own healthcare. So they were able to use cash to buy those. And in many cases in the HIV community, those people are alive today because they had the money to do that. Because they stayed alive long enough to prevent the progression of AIDS, if you will, and then obviously be able to take the medication.
Oh, yeah, I can absolutely see that. And I can see, like we say, nothing's free. Care is certainly not free.
No.
But there are certain things that we know are going to be out of pocket, like that assisted living rent, like non-medical caregiving. So I can see that little bit of flexibility is very helpful in illness.
Yep.
Really good. Okay, I could keep you all day. We're running out of time. Last question I wanted to ask you was, how do you know if this is right for you? I think most people think you have to go back to your life insurance company and barter with them, and that can be pretty scary. But I've learned today that you act as an agent, and like if I was going to do this, I would come to you and you barter with the life insurance, right? That takes a lot of the scary out of it.
Well, yeah, it's think of us as we are an extension of you. We're your representative. We're going out to the individuals and taking your life insurance policy and showing it to them and asking them for their best estimate of a life. So your first part of your question was, when is it right? So it's always right if you're even asking the question. So this is a free, non-binding appraisal. You do not have to sell your policy. We can get you an offer that exceeds your expectations by 10 times, and you do not have to sell your policy. This is just something to have on the ledger to say, okay, if I keep the policy, it's going to cost me X number of dollars a month, and that could increase over the next 10, 15 years, but I still have a death benefit. Okay, that's one thing. I can surrender the policy and I could get X number of dollars. I could sell it and I could get X number of dollars, which is 6.5 times more than if I surrender it. And then you make the decision as to what's best for you. And I would advise your listeners to sit down with individuals like yourself who understand what their real costs and needs are. I mean, every individual circumstance is a snowflake. They're all different. Nobody has the same set of circumstances, but you can't say, I want to think about selling my policy, but I don't want to understand what it's worth. You need to know what it's worth. You may get good news. You may find out that your policy is worth hardly anything. And the reason that is because the life expectancies that we've projected show you living 25 years. That could come as good news. Others, that might be terrible news, but it's also accurate. So you have an idea of what to do next, but you don't want to ever be the person that surrenders their policy and then sees the commercial on TV 3 weeks later and find out they could have gotten $850,000 as opposed to $37,000.
Yeah.
You don't want to be that person.
Yeah, exactly.
That's the beauty of what we do. It's a free, non-binding appraisal. I'll say it again. Make sure you find out what it's worth. It's no different than going to your local car dealer or driving around in a car with a realtor and finding out what the house is actually worth, what the car is going to cost. This way you can make a decision. Can't make a decision with the unknown. You want to have the facts in front of you and make the best decision for your personal individual circumstances.
That is very prudent. That's very prudent. I like that. So, Rob, tell our listeners how they can get in touch with you.
Sure. My name is Rob Haynie. My email is rob@lisettlements.com. And my cell phone number, which is how you get a hold of me, is 954-599-4433. If I do not answer, please leave a detailed message and I'll get back to you as soon as I can.
Oh, that's perfect. I really appreciate it. I'm sorry that that's all the time we have for today. I could keep going. I've enjoyed picking your brain.
Well, I enjoyed having my brain picked.
Well, let's do it again. If you enjoyed this podcast, please like, subscribe, and share it with others. As you know, Johnson McGinnis Elder Care Law and Estate Planning is a life care planning law firm. We help families with legal, financial, and care concerns that come with growing older. Join us again. We'll be back next week with another episode of Aging Starts Now.
Thank you for listening to the Aging Starts Now podcast. For more information about today's show, visit tn-elderlaw.com, click on the Free Resources tab, and then click on Aging Starts Now. You'll find the show notes there. And while you're at it, why not check out all the free resources available at tn-elderlaw.com. Document downloads, the Johnson McGinnis blog, educational videos, informative articles, helpful links, a TV show, and more. It's all there, free for the taking. If you enjoy listening to the Aging Starts Now podcast, please subscribe, rate the show, or leave us a review. It's easy to do on whatever app you use to listen. We would love your feedback on the show. Aging Starts Now. We'll be back next week with more candid discussions about the challenges created by aging, disability, and unexpected illness.